discussion forward. We've got Deven Choksey, MD at DR Choksey's Financial Services, joining in on the show right now. Deven, hi, morning. Good to have you on the show. Deven, your thoughts on Urban Company? I mean, it's a pretty much household brand, but just the size of the IPO and the pricing, is it a subscribe?
Yes, Aisha, good morning. Yes, it should be a subscribe. Though the valuation-wise, we still believe that I think they have not left much for the investors to basically earn from. But we still believe that I think there is a good amount of scalability built into this particular model. Broadly, the services that they are talking about can be categorized into 9 different categories in which I think they are offering those services. They offer them, I think, on India market as well as I think in the global market as well. In the global markets particularly, I think they are making losses. In India markets, I think they have already started coming EBITDA positive. So that is, I think, a good sign that India market, they are positive last 1 year. Should it sustain, which is at 25% kind of a CAGR contribution growth, I believe that I think this could probably grow further. And the key would be how do you reduce the losses in other markets? How do you build up on the volume and the business in the India market is going to be the key for this particular company. But all said and done, as you rightly observe, I think it's a household name. And Indian middle class probably, I think, requires such kind of service providers, which is app based. So certainly the scalability part can be definitely be more looked at. And should they keep adding some value-added services, in my viewpoint, I think that would be the delta I think that you could possibly ask for as far as I think the profits is concerned going forward in subsequent period. So yes, I think interesting business model. Maybe I think we'll have to give more time because their price issue at higher level. So to earn out of it, I think maybe give slightly more time by the investors.
And Deven, hi, morning. This may also joining in. I was just taking a look at the objects of their offer, and a big chunk of their IPO proceeds is going for expenditure of new technology development and cloud infrastructure. How big of a growth driver do you think this is going to be for the company, and what is your take on how they plan to use their IPO proceeds?
Yes, absolutely. I think this is a right observation because this kind of platform companies will have to invest in building the technology piece. At the same time, I think the computing piece to the data center and the cloud. In my viewpoint, I think this is a part of the business expenditure, and this will continue going forward as well. In fact, I think for most of the companies, using the cloud and providing the AI-based solution is going to be new normal as far as the growth program is concerned in their businesses. So what kind of percentage of sales I think is allocated for this particular activity is something which we'll have to systematically keep watching around. But this is going to be an ongoing part, and this is going to be also a differentiator. The competitors who are basically not been in a position to spend such kind of money, which this company is likely to spend through the IPO proceedings. In my viewpoint, I think it's going to be a differentiator. So yes, for scaling up, you require this particular platform, the services, the computing, the AI part of interfaces for the customers.
With respect to the financials, what we see is that, yes, of course, the top line has been growing at a very good pace. It has almost doubled in the past 2 years. But in the bottom line, for FY24, other than that, 23 as well, they have posted a loss figure. It was only in FY25 where the company turned profitable. Given that they have their own niche, one of the only players within the listed space, they have competition from the private players. Well, what's your sense when it comes to the profitability growth from these levels? What will be the fair number to assume in terms of their growth?
This profitability in the last year has also happened based on 2 things, as I see from the numbers. 25% kind of a top line growth has come. The contribution margin has improved India market, leave aside I think the global market, because the global markets where they are operating, there they are making losses. So at least India market, I think they have operated with the higher amount of efficiency, which could be clearly seen or validated from the numbers that they have produced in this particular year. And as I alluded saying, should they sustain this particular path of growing the revenue by 25-30%, and without putting too much load onto the P&L, probably I think they would be profitable going forward as well. The key would be how best I think they reach out to end customer with variety of services and how exactly I think they use the social media platform to I think generate new leads for themselves is going to be the key. So which one we'll have to keenly watch out for. But as of now, they seems to have corrected the maths and probably I think brought the company onto the profit. I believe that I think that should be a formula that should sustain. And if that is so, then probably yes, I think you could see higher numbers on profit side. How we saw in other platform companies, quick commerce companies. I guess I think a similar situation could emerge out of with this company, urban company as well.
Okay, Deven, appreciate your time and thanks so much for joining us in decoding this IPO with us. So that's the take on Urban Company's IPO, going to be hitting the market soon. But while we're talking about the primary market, we do have a couple of more IPOs to talk about. The first one of them is Shingar.